Well, let's move on to a company that absolutely nobody disrespects then in that case, and let's talk about Tesla. Tesla shares, they released Q1 earnings. The earnings were terrible. This is not really the theme of this. That was last week, I think, anyway. Earnings were awful. Revenues were down 9%. Auto revenues were down 20%. The energy business, that mighty energy business, continues to grow. They had some Bitcoin stuff in there as well, some stuff to do with regulatory EV credits and so on and so forth. Earnings per share were down 40%. Free cash flow was basically smashed. It was a bad quarter, whichever way you cut this. I don't think I'm offending Tesla. I don't know, maybe. I don't think I'm offending the majority of Tesla bulls if I say this was not a good quarter for Tesla. The stock, however, went up. And the kind of narrative that I'm seeing around this is that it went up because Elon Musk has announced that he will be spending less time sorting out the US government and more time trying to sort out Tesla. The question going through my mind when I heard this was, has he done enough? Because my view on Tesla appears to be quite a niche, an idiosyncratic one. So let me share it with everybody because everyone will hate this. I think car sales don't matter in the slightest at Tesla. I might have mentioned this before. I wouldn't have cared if they were up 20% rather than down 20% because I don't think there is any way that you can make sense of this market cap on the basis of selling cars. I also don't think you can do it on the basis of cars plus energy, by the way, either. I think the only way you can make sense of this market cap is if you think they are going to win at robotaxis. And the biggest obstacle between them and winning at robotaxis right now is regulation. Well, I say right now, at the time they reported their earnings, was regulation. And I think their best chance of getting around the regulation thing is by having someone busy gutting the department involved in regulating EVs. So I think Elon Musk spending time at the government is good for Tesla, not bad. It's bad that people want to vandalize their cars and stuff because they don't like them very much. That doesn't help. But I think where the real action is autonomous vehicles, and where the real action for getting to autonomous vehicles is regulation, and you have a much better chance with your CEO on the inside of government than you do on the outside of government, because I'm not actually convinced about their kind of crashing stuff, because they are being investigated for one at the moment, I think. What I was more relieved to hear about, if I were a Tesla shareholder, I'm not a Tesla shareholder, but what I would have been more relieved to hear is that he is still staying there for at least part of the time, because when it was kind of revealed that he was making his way out, my initial reaction was, has he done enough in his time there to get them to a position where regulation can be such that Tesla can somehow meet it? And it looks like we got my answer today. And the answer is yes. There is an announcement saying the regulatory standards are going to come down. The official line is this is so the US can compete with China on self-driving things, but they are concerned that the autonomous vehicle space is over-regulated at the moment, and in some ways it makes a bit of sense. Not really clear why an autonomous vehicle would need a rear-view mirror. I'm okay with that particular thought. So it's also not really clear to me how hard it would be to make an autonomous vehicle without a rear-view mirror, but so far the idea is that you would need various things that you don't actually need for a self-driving car, but ordinary cars do require them, so they can't be road legal without them. But hey, that's where we kind of get to on this, and that kind of thing is fine, but there is also some standards that are going to be lowered regarding crash reporting. They will be required to report crashes monthly on a less severe, whatever that means, basis. So you don't have to say every time you have a less severe crash. You can roll them all up and report them on a monthly basis. And there is also a property damage threshold that is either being increased or introduced. I'm not sure what it is, but it's going higher. And below that, you don't have to report crashes at all. So you can drive your EVs into all kinds of things, and as long as you don't cause any damage, that will be all right. My initial reaction when I heard this, Steve, was, you must be kidding me. But they are not kidding me. It is April the 25th as we record this, not April the 1st. Tesla shares were up about 8% today on this news, and I don't think it's very hard to see why. I think this is... my sense is that the earnings is basically irrelevant because I don't care about this from the point of view of selling cars, but I think they might have got closer to their desire to launch a autonomous vehicle fleet, and that makes me kind of glad I don't live in America, if I'm honest, Steve.
Yeah, same here, Steve. I think deregulation. Well, I mean, deregulation in some aspects makes sense, but then in kind of the actual safety aspects, not the nonsense aspects like rear view mirrors, deregulate away with your rear view mirrors on autonomous vehicles, but maybe not so on the crash reporting. And I mean, I saw on Dan Ives, he'd released a note and he'd managed to get himself fully lubed up for this, Steve. He wrote something along the lines of an off ramp for Musk out of Trump's White House. And in our view, it lessens global brand damage and political firestorms, and avoids the perfect storm chaos that had been forming over the last few months, and will end a volatile political chapter for Musk. And they expect minimal him to spend any minimal time on Doge going forward. And then he climaxed with, "We saw dialed in Musk at the conference call, which we have rarely seen in the past." I was just, look, anything that gets Dan Ives excited worries me massively, because he is a nonsense merchant. I agree with one of your early points as well, Steve, about Tesla's automotive sales don't really matter because the stock pretty much trades on hopes and fears. And it kind of has to. The fact that it's gone up like however much it's gone up this week on those earnings and a bit of deregulation. I think we've seen the difference just in the two stocks we've covered already, Stephen. The Google are the doing, and Tesla are the say they're doing, and I even with a leg up, I just wonder how well Tesla will go going forward. But yeah, the report, Steve, was dreadful. I've had people try and explain it to me as they decided that they were going to cut sales, cut production of the Model Y because they want to change it. And you kind of think to yourself, well, that's, I mean, every car company comes across things like that. And they get around it without these massive falls in revenue, and that sort of like the earnings call mentioned that they're looking at moving into India, which feels like a desperate move because India as tariffs will make the Tesla almost twice as expensive as other markets, which just seems like people are unlikely to want to spend that amount of money on a car that can't even get its panel gaps within an inch of each other. I'm not. I owned a Tesla. I'm not a huge Tesla fan. I definitely couldn't think about buying the stock here, but I do agree with Elon that whoever cracks the autonomous market will probably do pretty well. He's adding the humanoid robot market to that, Stephen. I mean, I think the humanoid market kind of still has a bit of C3PO about it. I'm not sure that's 100% ready to be something that I would say like, oh, it's definitely going to market like soon. I think that's the next sort of, like hope and fear that's going to kind of drive the stock forward for a while until it eventually releases. I mean, if that wasn't clear, I'm not interested in this stock at all, Steve, but maybe somebody will explain to us in the comment section why we're completely wrong, Steve, and why we've not thought about all the other things they're doing. But yeah, the one bright spark was that energy division, which people told us we weren't focusing on, and we weren't focusing on it because it was really small, and it continues to be so, even in the face of a 20% fall in automotive revenue, Steve.
Yes, strong performance from energy. We're closing in on the kind of latest deadline for autonomous vehicle fleet in Austin, which is supposed to be, I think, maybe about a month away from now. This is one of the many things that I don't think matters either with Tesla. It doesn't matter if they're 6 months late. It doesn't matter if they're a year late. As long as they're first, they will do very, very well in this situation. But it's just it's another deadline that people will get excited about one way or another. People will, supposing they missed this. My bold prediction back when was that they were going to miss this and blame it on regulation, whether or not it was true. It may well, from my perspective, it might have been the case that genuinely the only thing they had to do was get regulation, but they couldn't do it. Or it might have been the case that they weren't ready, but they were going to blame it on regulation. I'm increasingly wondering whether that they're going to actually hit this deadline, but I also think it doesn't much matter. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.